The recent stock market rally has brought one of the most remarkable weeks in recent financial history, creating numerous opportunities for active investors to secure significant gains, while those on the sidelines may have missed out on substantial returns. This video examines the forces driving current market trends, identifies key stock opportunities across diverse sectors, and provides actionable strategies for investors aiming to capitalize on future movements. With the influence of institutional investors, changing consumer trends, and the rise of cryptocurrency reshaping financial landscapes, let's explore how you can maximize these emerging opportunities. Number 5. Institutional investors drive Tesla's stock surge. Tesla's recent stock momentum illustrates the powerful influence of institutional investors on market performance. Over the past few months, Tesla's stock has climbed from around $200 to over $300, largely due to significant capital inflows from financial giants like BlackRock, Vanguard, and ARK Invest, all of whom increased their stake in the EV leader. For example, ARK Invest, led by Cathie Wood, has consistently added to its Tesla holdings, viewing the company as a long-term winner in the EV and AI sectors. This institutional backing brings more stability and confidence to Tesla's stock, attracting retail investors who tend to follow large institutional moves. Tesla's strength isn't just about electric cars. It's rapidly advancing its energy division, with solar roof installations and battery storage solutions, which now account for a growing percentage of revenue. Additionally, Tesla's strategic global expansion, particularly with gigafactories in Berlin, Shanghai, and Austin, positions the company to meet soaring EV demand worldwide. In Q3 2024, Tesla reported record production and delivery numbers, reinforcing its leadership in the global EV market. For individual investors, following these institutional investment patterns and Tesla's quarterly reports provides a more nuanced view of growth trajectories and potential investment opportunities. Number 4. Sweetgreen, leading the health-focused food trend. Sweetgreen has solidified its place as a leader in the fast casual dining space by catering to a consumer base increasingly focused on health and sustainability. Founded in 2007 by Georgetown University students, Sweetgreen now operates more than 100 locations across major U.S. cities, with a brand identity centered around fresh, high-quality ingredients and eco-friendly practices. Its commitment to compostable packaging, locally sourced produce, and transparency has helped Sweetgreen capture a loyal customer base that prioritizes ethical and nutritious dining options. This dedication to quality and sustainability has made Sweetgreen a standout in the fast casual industry, appealing to consumers willing to pay a premium for health-conscious food choices. One unique aspect of Sweetgreen's model is its Outpost program, which provides meal delivery services directly to corporate offices. This initiative has generated consistent growth in corporate sales, creating a dependable revenue stream. The company demonstrated resilience during the COVID-19 pandemic by rapidly pivoting to digital ordering and expanding its delivery options, which helped it sustain and even grow its customer base. Sweetgreen's app now drives significant engagement, with digital sales representing a large portion of its overall revenue. In recent earnings reports, Sweetgreen exceeded revenue expectations, thanks to rising customer loyalty, digital engagement, and successful new store openings. The brand's plans to expand into suburban markets highlight a strategic shift that could fuel significant growth outside its urban strongholds. Analysts are optimistic, forecasting a 15 to 20% annual growth rate, provided Sweetgreen can maintain its brand integrity and quality standards while scaling. This strategic expansion, coupled with its established consumer trust, positions Sweetgreen as a promising opportunity within the health-focused dining segment, catering to a rapidly evolving market that values sustainability and quality. Number 3. Grindr and the expanding online dating market. Grindr's growth in the online dating sector underscores the increasing popularity of digital socialization. With millions of active users, Grindr, originally a niche app for LGBTQ+ dating, has expanded its reach and now appeals to a broader audience. Grindr reported revenues exceeding $200 million, largely driven by premium subscriptions and in-app purchases, demonstrating that users are willing to pay for features that enhance their experience. The online dating industry as a whole, valued at over $5 billion, is expected to grow by nearly 10% annually through 2028, largely driven by social shifts toward digital connection and app-based dating. Grindr's recent listing on the stock exchange has attracted considerable interest from investors, particularly those looking for growth in tech and social media. However, the sector is notoriously volatile, with Grindr stock exhibiting significant fluctuations. For investors, Grindr's appeal lies in its high potential for short-term gains, given the app's strong user base and expanding services. For example, investors who took advantage of Tinder's similar trajectory experienced substantial returns during its initial growth period, highlighting the potential for profit in similar data-driven social platforms like Grindr. Number 2. Coinbase and cryptocurrency's impact on modern portfolios. Coinbase, one of the world's leading cryptocurrency exchanges, has attracted attention as Bitcoin and other cryptocurrencies experience a resurgence. Coinbase reported a 60% increase in transaction volume in 2023, largely fueled by surging interest in cryptocurrencies and blockchain technology. With nearly 120 million verified users, Coinbase is positioned to benefit from high trading volumes during bull markets, as seen with Bitcoin's recent climb past $40,000. The platform earns revenue primarily from transaction fees, which spike during periods of high volatility. Coinbase's model has proven resilient through various crypto cycles, with the company recently expanding services like staking and institutional custody, further diversifying its revenue streams. Moreover, Coinbase's stock often mirrors Bitcoin's performance, allowing investors to gain indirect exposure to cryptocurrency without directly holding volatile assets. For investors, monitoring Bitcoin-related events such as conferences, regulatory shifts, or major corporate endorsements can provide strategic insights into Coinbase's stock trajectory. The platform's recent partnership with traditional financial institutions like BlackRock and JP Morgan, which aims to integrate crypto assets into mainstream portfolios, underscores its significance within the broader financial ecosystem. Number 1. NVIDIA and Palantir, leaders in AI and data analytics. NVIDIA and Palantir represent distinct but complementary investment opportunities within the AI and data analytics fields. NVIDIA's powerful GPUs are integral to AI advancements across industries, with applications in autonomous driving, healthcare, and robotics. In 2024, NVIDIA reported a record quarterly revenue of over $13.5 billion, primarily driven by demand for its data center GPUs, which power AI workloads for companies like OpenAI and Google. The company's significant investments in research and development ensure that it remains at the forefront of AI technology. NVIDIA's acquisition of ARM, a leading chip designer, is expected to enhance its reach in mobile and embedded device markets, further diversifying its revenue. Meanwhile, Palantir's unique focus on data analytics for government clients has secured it lucrative long-term contracts. In 2023, Palantir reported an 18% year-over-year increase in government revenue, driven by its work with the U.S. Department of Defense and NATO allies. This reliance on government contracts provides stability and predictable cash flows for Palantir, distinguishing it from other tech firms. For investors, NVIDIA offers exposure to the commercial side of AI and computing, while Palantir provides a safer bet with government-backed revenues in data intelligence. Together, these stocks represent a balanced approach to the rapidly growing AI sector, catering to both high-growth and stable return investment strategies. Thanks for tuning in. If you enjoyed this video, make sure to give us a thumbs up and hit that subscribe button. Let us know in the comments which stock or sector you're most excited about, and we'll see you in the next video. Happy investing!